Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 9th November 2024. The Indian government has advised public sector banks to exercise caution in microfinance lending, particularly through co-lending with shadow banks. While banks reported no significant stress in their retail portfolios, the government emphasized robust underwriting processes for unsecured loans and sensitive loan recovery practices. Apple is planning to establish a new subsidiary in India, Apple Operations India, marking its first direct presence in the country. This subsidiary will focus on research, design, testing, and providing support to third-party manufacturers. This move signifies Apple's commitment to expanding its operational footprint in India beyond assembly and sales. SEBI has released a consultation paper on a review of the regulatory framework on alignment of the interest of designated employees of an asset management company with the interest of unit holders. Currently, AMCs are required to invest 20% of a designated employee's total remuneration, including non-cash compensation, in schemes over which they have oversight. SEBI has now proposed that this requirement may be reduced from 20% and made applicable slab-wise based on CTC of the employees. The RBI has amended Master Direction on KYC, aligning it with the updates to the Prevention of Money Laundering Maintenance of Records Rules 2005. Now, if an existing KYC compliant customer of a regulated entity desires to open another account or avail any other product or service, there shall be no need for a fresh customer due diligence exercise. Further, periodic KYC updates must be uploaded to Central KYC Records Registry with notification of updates to all relevant entities. The once thriving currency derivatives market is on the deathbed, with volume slumping close to 98% in less than 6 months and most traders shifting to offshore exchange after the Reserve Bank of India moved in to curb speculative trading. In January, the RBI said that all rupee-denominated currency contracts should be backed by valid and unhedged underlying exposure. Although traders could take positions of up to $100 million without presenting proof, they were still required to confirm the presence of an exposure. The regulation, which became effective in May, was intended to curb speculative trading. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.